Hello, everyone. My name is Heidi Brown, and I'm here at Remax Escarpment in the wonderful studio with my friends and colleague and mortgage agent extraordinaire, Joe Gianolla. You're going to be hearing from him later on today. And we have Todd behind the tech things and Sarah online with the chat. And we're all here to help you understand how to buy your first home in Canada. There is lots of tips and things that we're going to be covering over the next hour. So buckle up, sit down, ask your questions, take in all that you can. And, we hope that we get you on the right foundation to starting and building your first home. Buying your first home. Sometimes it takes a little bit of creativity, and there's definitely some solid foundational rules that you have to follow to get that started, but it is by no means impossible. And we are helping people each and every day achieve those dreams of buying their first home. So we're hoping that we'll be able to inspire you and educate you this evening so that you too can be part of that. So Joe Gianolla, you're going to hear from him more later, but he has been in the mortgage business for many, many years. And what's great about Joe, I mean, he's a great guy, but he has sort of been on both sides of the lending tables where he was approving mortgages. So I always use the term, he knows the landmines and how to navigate around them. And so he represents, he's with Mission 35 Mortgages, but he represents a whole myriad of different lenders where he can match, you and your situation and your story with the appropriate lenders to get you the right deal at the right rates. So it's really beneficial to use an expert like Joe to be able to shop around for your mortgage, which is the first and foremost step in getting pre-approved, but we'll get to that sort of later. So thank you, Joe, for joining us today. Now we're going to go over a lot of information, and just know that we are available to answer questions. We'll take some maybe along the way if it makes sense, and if not, for sure at the end there. And I wanted Sarah to pop up a booking link. If you have a particular story and information you want to share with me, I meet with people sort of one-on-one by Zoom or over the phone to go over your situation. So Sarah will pop in the chat the booking link where you can book time with me specifically and talk about your situation. So please feel free to do that. So this webinar is being recorded. It will be sent out to you by text. I know you got all that string of texts coming to you, but we didn't want you to forget that tonight's webinar was happening, and we just want to keep you informed. Life is really busy, right? So thank you for putting up with our automated things. You will get a link, but please go over to my YouTube channel, Heidi Brown Homes. It will be there as well as other information. If you want to see what I'm doing on social, I'm also on those channels. So please connect with me. I would love that. So today's webinar, so we're going to cover things about why buy a home and really when's the best time. A very important piece, the financial overview and what you need to do to set that foundation. There are certain buyer incentives and programs that are out there, so we want to bring it to your attention. Some of them are very popular, some aren't as common, but we want to at least bring those to your attention, and the importance of that foundational financial piece, and then a high level overview of the steps, what it takes to buy your home, and some tips along the way so that you're getting into that home and dealing with the competition and falling in love with the right home and being able to finance it. And of course, we're going to have time for question and answer. So I am just going to sort of not bore you with, I think being in real estate is a great thing to do. It is really allowed me personally to have financial stability. And on my own, raising my daughter, I sometimes use this example, but I bought and leveraged did some creative financing with it. So I've got a couple of properties, I've got 3, and built this custom home, and I was able to move money around and live life the same. I sent my daughter to private school and different things like that, all because of real estate. Had to take some chances. Not everything worked out rosily, but at the end of the day, there's a great security with having that bricks and mortar that you could call your own. So I'm hoping that, you're on that journey and that you can enjoy those benefits too. So, I mean, overall, I just wanted to talk about the benefits of owning a home. You can never time the market perfectly. I'm in the business, and it's very hard to predict. And Joe's in the business to exactly where interest rate's going to go, exactly where price is going to go. We try the best to follow the trends and be there, but it's it's tough to predict it, right? And we're in the business. So the important thing is just getting in the market, right? And so when you purchase a home, you typically always will have a mortgage. And the benefit of that is when you pay out your monthly mortgage, you're paying down your loan. Now that loan is part interest, but part equity. So each and every month, you're actually having like a little bit of money set aside in growth of equity. And the chart that I have here on the screen shows you the different styles of homes historically, and this chart went back to 2005. You can see the trend line going up. So that's the overall value of homes. So first, you're going to be paying down your loan and building equity. So you're going to be saving a little bit of a nest egg because your loan is going down, your mortgage is going to go down. So you've got a little savings that are there, but then you're also the benefit of a rising market value of your home. So you've kind of got twofold where you're building that equity. So regardless of exactly when you get in the market, the moment you do, these two factors are at play. Now, the mortgage, values of homes dipped a bit last year, right? They went down, but they've come right back up again. So real estate is a little bit of a long-term game, not short-term. So you get in, you ride it out, and it's a solid investment. And people find that this is a primary piece of their retirement planning, and really a significant piece of their financial security. The Royal LePage did a little report last year just to sort of demonstrate that too, and just as specific, so people like examples, but if you took two homes of similar value, one being rent, one being mortgage, the price of rents, if you're renting, the price of rents have gone up. So the price of rent versus mortgage may be comparable, but again, you've got that pay down of equity at play. And two similar properties, the same, but if you owned it, in this particular case scenario, it was $769 per month was being saved towards your equity. And when you multiply that over 5 years, which is your typical term of a mortgage, that was $46,000 in that one example. And remember, if you were renting, you wouldn't be seeing that. You still don't see it unless you cash out, but it's still there and you're building your equity, right? So those reasons are all why I believe, and I hope that you will believe, that real estate, whenever you get in the market, is a viable investment. So the market, I want to talk a little bit about the market before I hand it over to Joe. But so as we know, the last year, the interest rates have gone way up. But with that, prices of homes went down. They've dipped up a little bit, but those two are a balancing act, and those are sort of Bank of Canada announcements and inflationary things. So there has been a definite cycle in the market, but there is a shortage of homes and on inventory in general. So the market still is moving, definitely. Spring was a super strong market. Summer softened a bit, but the fall interest rates earlier this month stabilized. Interesting, we talked about this. We haven't had a huge craziness of the fall. I think there'll still be some uptake that are there, but homes are still moving for sure. More inventory is coming onto the markets, which is good for buyers. So that happens. It changes each and every day. So I have a chart that we produced earlier that was produced by the Royal Bank, and it's kind of around when do you buy, how do you buy? And it really just demonstrates at 3 points over the last year where you took a certain mortgage and what the interest rates are. So the top line is what the mortgage would be at 3 different points in time for the same house, because remember, interest rates went up, mortgages and mortgage values went down a little bit because the houses did dip. But my message here was, bottom line, the monthly payments didn't change all that much. So remember, interest went up, prices went down, so it kind of levels off a bit. Very tough to predict exactly, but in general, it's not all bad news when the interest rates go up and the market's there. And remember, the benefit is just actually getting into the market because it is a long-term game. So whatever you purchased, you know that when you go to sell, you're going to realize a benefit. And if you are renting and you know that doesn't benefit you well, and with the price of rents going up so much, great if you're a landlord, but there's a limit on how much you can put it up there. You know that money is not benefiting you in any way. And it's tough to save for a down payment when you're paying so much rent, right? So the more you can switch the dynamics so it's all in your pocket, definitely the better.
So, first and foremost, there are some very important steps to go, and it's all around money. So I'm going to send it over to our money man here, Joe, who's going to talk to you about, getting prepared and what you need to do. And this is a critical first important step. So we're going to send it over to you.
Right on. Hello, hello. Heidi, thank you very much for having me. As
You're
usual, I love doing these webinars with you. We've managed to help quite a few people,
Yeah.
which is awesome. So really what I want to do today is just go over the basics, right? Just the basics of the mortgage application, what you need to know so that we can get you pre-approved. More importantly, which makes Heidi's life a lot easier too, is a price ceiling, right? So I can say to Heidi, hey, this client can purchase a home for up to X amount of dollars, right? It makes the shopping process a lot easier. So we're going to go over a few things, and then people always have questions about mortgages because they are complicated. There is a little chat box. You can always put those questions at the bottom in the chat box. At the end, as long as there's time, I'm sure we can address some of those questions. Okay, so 3 key elements. First being income, right? You have to have income in order to qualify for a mortgage. So we'll just go over the most common types of income. First being a salary. Right, so a salary is just basically, you know how it is. You have a set amount of money that you make every year, and it's paid to you weekly, bi-weekly, because it's stable, it's steady. We can use the full salary amount. So in those cases, all we need is a job letter and a pay stub. Really, really simple, easy to confirm. Okay. Second is hourly employment. So if you have guaranteed hours, meaning like if you're a nurse or a firefighter, that type of thing, and you're guaranteed X amount of hours at X hourly rate, that's really straightforward. It's very similar to a salary, right? You're guaranteed a certain amount of money. Hours that are not guaranteed, that's where it can get a little bit tricky. So whenever hours are not guaranteed, typically what the lender wants to see is a 2-year history, right? So they're going to ask for the previous 2 years T4 slips. They're also going to ask for a pay stub and a letter of employment, of course. And of course, the tricky one, self-employed applicants. So self-employed can be tricky because, I'm self-employed, Heidi's self-employed. We don't want to pay taxes if we don't have to, right? So a lot of people, when they do their income taxes, they write their income down as much as possible so that they don't have to pay those taxes, right? The downfall of that is that we use that income to qualify for the mortgage, right? That doesn't, and that's what makes it challenging for self-employed individuals. However, there are ways around that, right? There are products out there that tailor to self-employed individuals. Like Heidi mentioned, I work with a whole bunch of different lenders that have a whole bunch of different options and programs that we can use, okay? So that's your income. Those are your 3 basic income sources. So the best way to think about it is, if it's salary or guaranteed hours, it's real simple. It's a pay stub and a letter of employment. Anything that's not a guaranteed income, anything that's inconsistent, the lender's always going to require a 2-year history. It could be 2 years tax returns, 2 years notice of assessments, 2 years T4s, 2 years T5s, 2 years T4As, depending on if you're commission or, or like for instance, bonuses or overtime income. Same thing. The lender wants to see a 2-year history for that type of thing. Okay, that's your income. Second piece of the puzzle is down payment, right? You've got to have some down payment. The minimum is 5%, okay? So whenever you put 5% down, that's called whenever you have a down payment of less than 20%, that's called a high ratio insured mortgage, okay? So there is a premium that you have to pay when you have a smaller down payment, but that premium is just added right onto the mortgage. You don't have to pay it out of pocket. It is an expensive premium, but it's worth it to get you into the housing market, okay? So if you can come up with 20% down, that's ideal because then you can avoid that high ratio insured mortgage. You don't have to pay that premium, and it opens a lot of doors. Okay, it's easier to qualify when you have 20% down. Okay, there's also cashback options available. So if you're shy a little bit of money, like say for closing costs, for instance, or maybe if there's like a small debt that needs to be paid out in order to qualify for the mortgage, we have cashbacks. So basically what that is on the day of closing, the lender will give you cash, right? Up to 5% of the mortgage amount. So they'll give you that cash, and then what they do is they just blend the cost of that money into the interest rate. So in exchange for a slightly higher interest rate, they will literally give you money. That's how the cashback works, okay? Your down payment, ideally, you want it to be from own resources, meaning from your own savings, your own assets, but it doesn't have to be, right? If you have a gift from family, help from family, ideally an immediate family member, we can use that, okay? Where it does become tricky sometimes is if that family member is not in the country, okay? So if you have someone overseas that wants to help you with your down payment, I highly suggest that you get that money into Canada as soon as possible. Ideally, you want that money in Canada for at least 90 days before you submit an application to a lender, okay? If you don't, it's not the end of the world. It can still be done, but it can cause problems. Depending on what country the money comes from, depending on the type of paperwork that we need to qualify the down payment, it can cause problems. So be proactive, try to get that money into the country as soon as possible, put it in an account and just leave it there. Just let it sit. Don't move it around, okay? And then lastly is credit. So it's ideally, obviously, you want to have a high credit score, right? You want to have good credit. It's not the end of the world if you have some blips on your credit, right? It's not going to kill your application. So we'll just talk about the ideal scenario. The ideal scenario is a credit score above 700. That's what you want, right? It's below 700, again, not the end of the world, but you want to be above 700. You want to have minimal outside debt. So you don't want to have a massive car payment that will hurt how much you qualify for. You don't want to have huge credit card balances, big lines of credit. Student loans, like big student loans, sometimes can hurt your application. Again, there's always ways that we can get around these things, but it takes time. So always try to be as proactive as possible. Get that mortgage pre-approval done as soon as you can. There are products available for people with bruised credit. So if you've been through a bankruptcy, or if you do have a really high debt load, there are things that you can do, but typically they will require 20% down. Basically, with 20% down, I can almost guarantee you a mortgage, right? If you've got that much equity, there's a whole bunch of products. It's when your down payment is less than 20, that's where it becomes a little bit more difficult to qualify. And, Heidi was talking about the market. We've got this really interesting combination right now of high interest rates and high prices, the combination, which is kind of sort of new territory. So that can make things a little bit challenging, but it's not impossible, right? If you do the work and you have the right strategy and you're working with the right people, you can still make it happen. So a couple things to consider, really, really important. It's difficult to buy a house on your own right now. So you want to try and have a co-borrower. It could be a partner, a spouse, a parent, a sibling. It could even be a friend, right? It's not a terrible idea for, two couples to buy a house together, maybe something with 2 units. Really what you just want to get in the market. Your first house is not going to be your last house. Once you're in, you're in. I think I've heard this story from so many people that, oh man, my first house, this went wrong. It was it was in this area, it was that area. Everybody starts somewhere, right? No matter what the market is, you're not going to get that perfect house right away. So just get in there. Co-borrowers, gifted down payments. Like I said, if you can come up with 20% down, I can get you a mortgage, right? It makes things a lot easier. So I always say, I've said it a million times, When you buy your first house, that's when you want to ask for favors. That's when you want to go to mom and dad, your brother, your sister, your friends, and ask for that favor. Yeah, I think that's pretty much it for that.
Yeah. We have a question in the chat. Can you read that?
Oh, you want to do it now? Okay.
Yeah.
What does that say?
Do you want me to read it?
Oh, there.
What?
If we bring our money from our home country, do we still have to keep the money in the Canadian bank account for 90 days? Ideally, yes. That's what you want to do. You want to bring the money here. You want to park it in a checking or a savings account, and you just leave it there. Just park it there. Don't move it. If the money's overseas, if you buy a house and then we have to verify down payment, and the money is still in your home country, it's going to be really complicated, because then they're going to ask for copies of wire transfers, money being copies of bank account statements from the country of origin for 90 days. They might need to be translated if it's not in English. They might need to see, they're going to need to see the money being wired into the bank account. They're going to need to see, they're going to need gift letters signed. And it's honestly, 9 times out of 10, depending on the country, it doesn't work, because there's just too much lost in translation. If it's like the United States or the UK, it's not that bad, right? That's actually pretty straightforward, because their banking system is just like ours. But other countries, especially where the language is different, it becomes a lot more challenging. So very good question. So just be proactive. Get the money in the country as quickly as you can. Hopefully that answers that. But go ahead, Heidi.
Okay.
Thank you.
So then you're not done yet.
Oh, what's next? Okay.
Buyer incentive programs.
Yes. Okay.
Just to touch on that.
Perfect.
Yeah.
First-time home buyers. Okay. I'm assuming a lot of the people watching right now are first-time home buyers. So the first is the home buyer plan. So what that basically means is you have what's called an RRSP, Registered Retirement Savings Plan. You can open one at any bank or investment company or with a financial planner. Basically what it is it's an account where the money that you put into it becomes a deduction against your income, and it actually lowers how much money you pay in taxes. Okay, so it's a tax deduction. By putting money into it, you get a tax deduction. Number 2, the money that's in there is tax-free. So any interest or returns that you earn from that money, you're not going to pay any taxes on it. Okay. The other advantage is that, if you take money out of the account, you get taxed on it just like it's regular income, unless you're buying your first home. If you're buying your first home, you can pull that money out tax-free. So you get all the benefits of the tax deductions and the tax-free income, and you can also still pull the money out tax-free to use it for your first home. There is a small catch. You have to pay it back, but you've got like 19 years to pay it back. So who cares, right? There's also another account that just came about a few months ago. It's called the First-Time Homebuyers Savings Account. It's exactly the same thing, except you don't have to pay the money back. It's the only difference. Okay, so both are great options. There is a first-time homebuyer incentive program with the government. I don't even want to talk about it. I don't recommend it. It's terrible.
We have to let them know.
We have to let them know it exists, but nobody ever qualifies for it. It's not free money. The government's going to own a piece of your house. If you really want to know about it, just reach out directly, and we could always talk about it. And then there's the best one, which is the land transfer tax credit. So if you're a first-time home buyer, whenever you buy a house, you get charged what's called the land transfer tax, and it adds up. It's usually around 1% of the purchase price. But if you're a first-time home buyer, you get a credit of up to $4,000. So that's always good. That's going to save you on your closing costs big time. So those are your incentives. And then, do you want to talk about another question? Is there a ballpark number of how much the mortgage will be for every 100,000 of mortgage? You mean of income, maybe? Based on today's interest rate? Oh man, good question. I'd have to do a little bit of math on that. For 100,000 of income. After I'm done, while Heidi's talking, I'll do the math because it's changed a lot. Like the interest rates have gone up a lot over the past year and a half, and that number keeps changing. But I understand what you're saying. I'll do the math on that one, and we'll come back to it.
Questions, because I wasn't sure for clarity.
And then, do we want to talk about New to Canada? Are we doing that now?
New to Canada requirements, yeah, and how
Okay.
that differs, and if there's anything they should be aware of.
Okay,
Yeah.
perfect. So, New to Canada. So first of all, a big question is immigration status, right? So you at least need to have a work permit, and you need to have at least applied for permanent residency. If you haven't applied for permanent residency, then you're going to be considered a foreign buyer, and you won't qualify for any of the traditional mortgage products. And you'll also get charged a foreign buyer tax. Okay, so you have to have applied for permanent residency. For finance and credit requirements, very similar to first-time home buyers and all the stuff that we talked about originally, income, credit, down payment. Couple little things that are different. You have to have been working in Canada for at least 3 months. Okay, at least 3 months you have to be working in Canada. You can have the 5% down payment, the minimum 5% down payment, but you have to have a foreign credit bureau along with it. So typically that only works with like the UK and the United States, because they have foreign credit bureaus that are very similar to ours. But if you're coming from a country that does have credit bureaus, then we can consider with 5% down. You can, however, do 10% down without a foreign credit bureau. Okay, 10% down without a foreign credit bureau. In that case, basically what the lender wants to see is an alternative credit source. So utility bills, cell phone bill, confirmation that you've paid your rent on time for 6 to 12 months. Sometimes they just want to see like bank account statements showing that you're not in overdraft all the time, and that you carry a healthy balance. So yeah, an alternative credit source. Income, employment, same as anything else, right? All the stuff that we talked about before. Any newcomer financing incentive programs, all the same as all the same first-time homebuyer privileges also applies to New to Canada. And the foreign buyer ban, again, as long as you've applied for your permanent residency, you don't have to worry about that. Okay. Yeah, I think that's it. I see questions. Do we want to do them at the end, or do we want to do reply to them now? You want to do it now?
Yeah.
Okay. The math one I'm going to do. I'm going to do while Heidi's talking.
You're going to have to take a calculator, right?
Do all mortgages require a down payment? How much is that usually? Short answer is yes. There are some very rare situations where you don't need a down payment, where it's like, I don't know, if you're buying off your parents and they give you gifted equity or something like that. But yeah, you do need a down payment. You do have to have that minimum 5% down. There's really no way around that. So if I'm on a work permit and waiting for card.
For PR card, I guess.
For PR card, and don't have to pay foreign buyer tax. Correct. As long as you've applied for it and you have a work permit, then you do not have to pay the foreign buyer tax, and you would qualify for the New to Canada program. Any other ones right now?
That's it, I think, for now.
That's it for now. Keep putting them there, but in the meantime, back to you, Heidi.
Yeah, you'll do your calculating.
Yeah.
Okay. So again, Sarah will put in the chat the booking link to book time with me to answer your specific questions and scenario. If you want time dedicated with me, and also keep popping those messages in the chat. We definitely have time to address them, and we want to make sure that you're walking away with your questions answered. And I know there's a lot to cover, and if you're overwhelmed or what have you, we'll recap it individually. Just book that time with me, and we'll go over it. So now, you first and foremost got to get that money in order, and we need to know
sort of the range of pricing, the top end of what you are pre-qualified for. So the first and foremost, the thing that's really important is building your team. There, as you can see, just touching on the financial piece, you really need experts by your side to help navigate the information and find the right program and find the right home and find the right information specifically for you. So those experts that you'll need to have on your team is going to be that mortgage lender, a great real estate agent, so you get the money, look for the house. Then you're going to need a lawyer to close a transaction. We have a roster of great lawyers right here at Remax Escarpment. We have a great team, as well as many other lawyers that specifically work on real estate transactions. And it is required that you do need a lawyer for these because the monies come in from the lenders and transferred through the lawyers, and the title to the homes transferring from the sellers to you, the new buyer. So a lawyer needs to be involved in that whole process. So they need to be employed, very early on in the get-go. And one other very important members that plays a really important piece, especially if it's your first time home or any home that you go to buy, you want to make sure that you're buying a property that's good and there's no major structural or other flaws, which is employing a home inspector. So a home inspector, I'll get into some of the conditions later, but it's somebody that will review the integrity of the home and different things, so you know any anticipated maintenance that may come up or if there's anything wrong with it. So those are the things. And again, I have a roster of home inspectors that help that sort of process. So, once you'll need that lending in place and the agent to be able to connect you with homes. And there's things that you want to keep in mind when searching for your home. Joe touched on some creative ways of doing sort of co-buying, and I've got some examples coming up. But, as I said earlier, there's no perfect time to get into the market. It's just great to get into the market. And sometimes waiting and trying to save money while renting and time just passes you by. So if you can get creative and look at ways to get into the market, it might not be ideal, but sometimes it's just a short-term situation. You get in the market, you co-buy with somebody, you've got, parents helping or something like that to get your foot, get that stronghold. And remember, it doesn't take any time at all for you to pay down your debt and build equity that you can, cut the ties sometimes with those parents or the co-buyers and go out on your own. So just any creativity to get you in the market. So first and foremost is setting that budget and making sure you know what's there and knowing what that money is down. And like I said, creating that gifting from parents, borrowing against your RSP, and that's all part of the budget on what you can buy. And when it comes to next looking for your home, that location, okay, there was a whole movement, sort of during that COVID time where people were working from home. And so they were buying great properties out of the city. Some of them are coming back in or what have you, but there's been a shift on, a lot more people are working from home than they ever used to before. So those outlying cities are far more attractive. And I know that, today's closing, the couple that we helped, they bought their house today, the Pittons, they closed today, but they bought a townhouse in Hamilton and they work in Richmond Hill in downtown Toronto, but they only have to go in once a week or twice a week, right? So it was well worth it that they could get more money and a better property by coming on the outskirts and a better place to raise their family, their cute little daughter. She's so sweet. So yeah, being creative and being flexible that, even though that's your place of work, where do you want to set up and have your location? So, the Niagara region has great opportunity with pricing. Hamilton has great, pricing and is still commutable within Toronto if you do work in Toronto. So just having an open mind on the location, on where that may be. And because, as Joe alluded to, that's your first property, right? And so get in there. You may move within, off the average, they say it changes, but like 5 to 7 years, right? And I mean, if you've done really well and you saved money and you've grown equity, like what I did was I kept that first house and then I just leveraged equity and I bought my second house, right? So it's not necessarily your forever home that's going to be the first one. So as long as, it's a good investment in a property and you're happy to live there for that period of time, just know that you've got your sights on the next horizon, right? So that means when it comes to the type of home, it may not be that single detached home with a big backyard. It may be my first home was a townhouse,
right? And I still have it. That may be what you have to do, or a condominium, right? So it really sort of depends, or a semi, or maybe a detached home, but in Niagara. That type of thing. So just wanted to plant the seed that have an open mind, right? And is there a way that you can commute and you can share it? Because you're going to get more for your money away from the core of the GTA. So I like to give examples so that people can see what's real. And here's Nicholas, and I worked with him to buy his first home in Port Colborne. And he was so thrilled, right? He was able to have 20% down. He bought a little house and he had to renovate it sort of extensively. And we paid, about 2 years ago, I guess now, $334,000 for this house that needed the work, right? But now, and he put sweat equity in it, and that place is worth over $400,000. And he's got a solid tenant, family member, who's paying, and every month he's paying down his loan. He's not so happy about the interest rates right now. He's got a variable mortgage, but he knows long term he's done well. But Nicholas doesn't even own a house. So he rents, and he just has bought his first home as an investment property. So this is where the creativity comes, right? And his operating costs are covered, other than a little bit of a blip with the interest rates or what have you. And every month he's growing. That chart that I showed you, it's going up in value, his loan's being down, and he's already looking at the next deal. And he's feeling very proud and empowered that he's in the real estate market, even though he's still renting, because where he lives, and he commutes to Scarborough, they live in Georgetown, buying a home right now is just too much an investment, and he wasn't fully, he was getting his apprenticeship, so he was just kind of reluctant to make that big step, but he wanted to get into the market. So that's an example of how you can get into the market, being creative. And he lived in Georgetown. Like, I took him to the Niagara region because there was just really great finds to be. He didn't really care where they went, as long as it was somewhere he could drive to if he needed to. So that's where we ended up. So that's Nicholas's story. So I talked about when you're looking for your property and the things to keep in mind, to have an open mind, being creative, knowing that that's not necessarily your forever home. And in Nicholas's case, it's not even a home that he's staying in. So you're going to look for a home, you're going to find one, but this is where you're going to want to rely on a really solid realtor to help you with the preparation of your offer. There is a lot of documentation, and a lot of this is done electronically, but there's a lot of forms. So advice to you is making sure you review those forms with your realtor in advance, so you know what you're signing, because they are legal documents, right? So when you prepare an offer, what's best is that you look at the home you want to purchase. A good realtor is going to show you everything that's going on within the local market to kind of give you a range of what's there. And there's certain factors where you want to know how you're going to position your offer. Often, especially in the entry level into the market, there may be competing bids. So you're competing against other people. So you often have to go in with a very good offer. So working with your realtor to sort of pick a market price that's palatable, depending on if you're going against 10 offers or you're going against one. Look at how that goes. And working with your realtor to figure out what's the best way to position your offer. But there's ways you can strengthen your offer that's not really going to cost you per se, but it may make your offer stand out. One of them being a higher than what they're asking for deposit. You're going to have to put that money down as your down payment anyways, but if you give a deposit, say they're asking for a $10,000 deposit, but you come forward with a $20,000 deposit, and if you can put it in, this is my other little tip, it works a lot of times, if you put it in a money order and you attach a picture of that money order with the offer, they're like, oh, we don't have to wait, the money is here. Like, it puts your offer above others because the money is there, right? And it's worked. It actually worked for the deal that closed today, a letter. So I wrote a letter about the family, and it was there. It was their first home in Canada, and we had lost a few other offers, and I talked about them with the, and when I actually met the sellers, and the agent told me, he goes, "Oh my gosh, your letter!" We like that. It was like it was a little thing. And then when I met the sellers, because I had to drop something off, he's like, oh, "Your letter." I got to know them, and it was important. So it was just a little bit of a letter that goes with the offer that talks about the people and where there is, because it's all just paperwork. And so if you can add something like a good deposit, proven, a nice little letter, it helps with your offer. But you got to get that market price.
And then I talked about the conditions, depending on the climate of the market, safeguarding it. Our lenders are always going to want you to put a condition to financing. And what that means is when you're negotiating that offer, you say, I'm going to bid this price to close on this date. However, I need 5 days to confirm my financing, right? So even though Joe may pre-vet the amount, that 5 days gets him a chance to scramble and make absolutely sure that you can finance that property, because it's you may be financed, and correct me if I'm saying it wrong, you will be financed, but they want to make sure that the property is, you haven't overpaid and it's a good deal overall. So putting that condition to financing in gives that little safeguard before you sign officially on the dotted line.
But I will tell you, am I muted? Am I, okay, there we go. Yeah, if you can get away with a condition of finance, I would say always take it. But, you know, if I have an application and it's really, really strong, you know, and you have to put in a cash offer, I will let you know, right? So, you know, that's what I always say to Heidi. You know, whenever Heidi's in a situation where, you know, there's multiple offers, it's a really competitive house, she'll say to me, hey, Joe, do we need this condition of financing? And you know, if it's a really strong application, I might say to Heidi, no, we don't. You know,
Yeah.
But yeah,
that doesn't always happen, right?
Right.
So that's like the
put
benefit
in
of
the
having a
condition
good
of
lender.
financing.
Yeah.
But sometimes in situations where you have to, like in 2021, there were no conditions of financing.
You couldn't, like your offer would never ever get accepted in
Yeah.
them. Right? And even now it's, you know, depending on, right?
Depending.
So that's the benefit of always having, you know, those experts to your side, and you strategize what's going on in that particular time, right?
Yeah.
The other condition that I mentioned earlier, getting that home inspection, you know, if you can and you're not, it's highly recommended that you put a condition to financing in, or condition, pardon me, to home inspection in your offer. So that means that you get typically 5 days. You, at your own expense, have to hire that home inspector, which will be $300 to $500 approximately, but you'll know peace of mind what you're purchasing. But you may find something at that point in time that's really structurally wrong. So you have the option, because you put that a condition in, to actually cancel the deal and to get out of it, right?
And the condition of the property sometimes can kill the mortgage too, right? So yeah, the home inspection is really important.
So what I've done and what happens too, and so those two conditions in a competitive market will lessen the strength of your offer. However, I actually got a deal where we put a 24-hour condition to finance, or condition to home inspection. So they accepted it because it was their first time buyer, but we really wanted it inspected. So they accepted and they gave us 24 hours. So we got the deal because we said, we're going to do a quick turnaround in 24 hours.
Awesome.
So that was another little tip to there. But another thing you can also do, if they're holding, because in a competitive environment, they may list the house on, say, a Wednesday, and then they're asking everybody to submit their offers on the following Monday or Tuesday. So you go in, you see it, you want to put it, you can request to go in, and again, at your own expense, do a pre-inspection and actually have that home inspection before you put the offer in. Again, this is a little bit of money out of your pocket, but it's peace of mind. So you can actually get that done so that when you submit that offer, you don't have to have the financing condition because you've already, you know, just determined so far. So those are some of those little tips that are very helpful in the preparing sort of your offer. And I guess the message here is each situation is different. Just make sure you've got a realtor and a lender that you're very confident in that will help you sort of through that. And, you know, feel free to book time with me. Sarah will put that in the link if you need to talk to your specifics directly. So me and my examples, because this is a real person, this is Chris, who also another example of how you can get into the market. It was his first time purchase. And I just realized he was an apprentice at the time too. I didn't mean for them both to be impressive, but they were younger people just like getting into the market. And he was living at home and he didn't have the full amount of the down payment, and he didn't have the full income to support it. So he went to his grandmother, who helped him with the down payment and helped him with the co-buying situation. And it was a bungalow that had 2 doors. So over the 5 years, for the first 5 years of the mortgage, he lived in part of the house, he rented out part of the house, he rented out all of the house. So he had varying ways that there was always income coming in from that property. So he wasn't fully paying sort of for the mortgage. Then by the time the 5 years was up, he actually had grown enough equity. The place had gone up so much in value, and his tenants had been paying, him rent, and then in fact they were paying down his mortgage. He actually grew $400,000 in equity in that 5 years. I kid you not, great property on the river. It was super. And then through that time, he became a certified electrician, and then his income went right up. And he was able to then, at that point, have the solid income when his 5-year mortgage was up and it came up for renewal. He was able to pay his grandmother back, get her off title, and it's entirely his. So, and he has, I drove by it and I see all of the stuff on the front. He's renovating it and he's moving in finally to himself because he's getting married. So that's Chris's story. So, so I just, once you, determine the budget, I'm going to recap because there's a lot of information I know I threw at you here. You determine your budget, you get the great team, you search online, you have an open mind, you make sure you got your money in order, you put in a great offer, all those little tips on the down payment and conditions or no conditions and all that jazz. And if you actually are successful in getting that deal, condition or not, but that signed document is a legal document, it is yours. And typically, 30 days is short, but typically around 60 days is going to be the amount of time that you have to scramble and get yourself packed and everything all ready. During that time, there's going to be a number of deadlines. So you'll be working, if you have a great realtor that will monitor those deadlines, making sure you're meeting the conditions and you're getting all that done, then you're going to want to make sure you'll need a house insurance. That's over and above the insurance that Joe talked about the mortgage insurance, but you'll need fire, home, contents type of insurance, which mortgage lenders do require you to have. So you want to be setting that up in advance, and then knowing who your utility companies are and getting that set up so that that switch over on closing day happens very seamlessly. So and during that time, you got your down payment and your deposit money together and ready to go. Because you will, through that process, as you approach the closing date, meet with your lawyer to give them all that information and sign that over, right? So you'll need to have your trusted team help you through the very many details that happen there. So when I look at that as sort of a very quick high-level recap, and there has been a lot coming at you, so feel free to book time individually for us to go over any of these things. But that income, the down payment and credit, I think Joe did a great job explaining all of that. And every scenario is a little bit different, but that'll give you just sort of a high level on what you need to do. But booking time with Joe and getting a pre-approval with him, we'll deal with the specific situation. And remember, when you're getting ready for that buying of your home, building that great team, having an open mind, searching for your home, and getting those tips and things to get your offer in, and great incentives, and then all the details that happen, working with those individuals to make sure nothing falls through the cracks as you finalize your deal, right? So yeah, I think that was the official kind of things. I never even mentioned the free download of the guide that's here. So this steps through in some of the details, and it has the links to the different programs that we talked about here. So please feel free to do that. And again, you can book one-on-one appointments. That's the booking link that's there. Yeah, and I know that there's more questions. So I want to, and did you calculate?
I did.
He forgot to calculate.
No, I calculated.
Oh, you calculated.
Yeah.
Okay, good. So, and then we probably have some more questions.
So basically, it's about 3 times income right now, which isn't great. But for $100,000, got to be somewhere between $30,000 and $40,000 of income. There's a lot of things that change that number. Interest rate, amortization, which is affected by how much down payment you have. If it's a private mortgage, it doesn't even matter. Income doesn't even matter as long as you have enough equity. So there's a lot of different things, but basically it's about 3 times income. The stress test has really lowered how much people qualify for, but still not impossible. There's lots of ways to get it done. One of the questions was, where was it? Let's say 6.7 3-year fixed. Okay. 6.7 3-year fixed. A lot of people want 3-year fixed mortgages right now, and I understand why, because they're saying that rates might go down and you don't want to lock into a high interest rate for 5 years. The problem with that is 6.7% means that you have to qualify at 8.7%, which means the amount of money that you will qualify for will go down drastically. So the 5-year fixed rate is the lowest rate right now. In order to get as much money as possible, you're probably going to have to take a 5-year fixed rate. 5-year fixed rates right now, you know, we're getting them in the high 5s. Most lenders are in the low 6s, but I've got them in the high 5s. That's going to help you qualify for way more than 6.7. So I hope that answers the question. I don't think there's any other ones.
There's one other one there that I could jump on. The question is there any other option to get the seller to rectify if the home inspector fails to identify any prevailing interest issues in the house?
It's a Heidi question.
Okay, so first of all, I'm going to say, if you do the home inspection and you find something, then you can renegotiate the price and split the price. I just did a deal recently and there was mold in the attic and the panel was dated. The panel was working, so we couldn't get them necessarily, the electrical panel, do anything there, but we were able to get a several $1,000s price reduction for the mold in the attic. The problem is, this is looking like the question is, if there's something, if there's any future issues in the house. So you've hired the home inspector, so you hope to have one. If it's not identified and something comes up later, you're kind of out of luck, right? So that's why you have a home inspection, to give that assurance that are there. Now, I also sold a house which was a little out of the city in a water-based area, and they had a flood in the basement. So when they ripped up everything on the walls, they realized that wasn't the first flood in the basement, but no one disclosed that there had been a prior flood in the basement. So you could try to go back and get them to rectify at that time, but you don't know if maybe it had sold a few times even prior to people and it was all unknown. So it's a very gray area. So that's why the importance of a home inspector. Look at anything now, have that thoroughly done, and that's the time to have something. If something comes up later, even a week later or what have you, it's really, really tough to get any of that fixed, right? So I hope that answers the question for you. If not, pop more in the chat.
If the family income is $100,000, what will be the eligible mortgage amount? It's going to be somewhere between $300,000 and $400,000, roughly, would be the mortgage amount. Now, again, that depends on amortization, how much down payment you have. You know, if you've got 20% down, it could be way, way, way more than that, right? So it depends. With a high ratio mortgage, that's probably where you're going to be, somewhere between $300,000 and $400,000 mortgage.
And that's where I keep bringing up I'm a fan of the Niagara region. Hamilton has some more things that are happening. Brantford is actually also a good pocket when keeping that location in mind. Those are some of the areas sort of outside the GTA and Niagara region where you can get more for your money, and you might be able to find something that works for your family and your family within that price budget, right?
Yeah, absolutely.
So that's where you have to be creative.
There's lots of different income sources as well that we can use. So I mean, if the house has a second unit, that's rental income, we could use that. If you get what's it called, the baby bonus or the child care benefit, we can use that as well. So there's lots of different things we could do, but again, that 20% down really makes a big difference. So when I say, like, you know, ask for help from family, ask for favors, that's the way to go. There is another question here. If the amount of the property is much higher than the eligible quantity, what else can we do to improve our chance of approval?
So if it's over their budget, I think, what can they do to?
If it's over their budget?
Yeah, if the amount of property, so if what they want to buy is more than they're eligible for, what can they do to get approval?
They do get approval. Well,
so maybe that basement apartment, maybe.
Again, you know, whenever the down payment is less than 20%, Basically, think of it this way. Whenever the down payment is less than 20%, although there are a million lenders out there that are willing to lend on those types of mortgages, actually lenders prefer those types of mortgages. There's only 3 insurers that will insure those mortgages. Okay, there's Canada Mortgage and Housing Corporation, which is CMHC. There's Sagen, formerly known as Genworth. I was a senior underwriter there for 6 years. I know them very well. And then there's Canada Guarantee. Okay, so really, you need one of those 3 insurers to approve the deal in order to get it done. And those insurers heavily audit the lenders. They have very, very strict rules. They don't make many exceptions. Okay, so for those types of mortgages, there really is no wiggle room. You really need to make sure that you're working with a good mortgage agent who knows how to verify income properly, who knows how to verify down payment properly. Because if they screw up and they give you the wrong price ceiling, you could end up in trouble. Because if one of those insurers don't do the deal, now you're gonna have to come up with 20% down, or else you are at risk of getting sued or losing your deposit. Okay, so you have to be really, really careful about that. With 20% down, there's options. Okay, lots of options. Worst case scenario, we can always do like a private mortgage. So yeah, but
For the 20% down?
Yeah, if you have 20% down, there's a lender out there, right?
But
There's
can
a
you
lot
get
of equity-based lenders.
Can you get private money for that 20% down?
No.
Okay.
No,
I just want to clarify
that's
that.
what I'm saying. So
Okay.
you need to have that down payment.
So bank of mom and dad
Bank
good.
of mom and dad
is wonderful.
Wonderful. Even if mom and dad, like I have a lot of clients that their parents will refinance their house to help their kids buy a house. You'd be amazed what parents or siblings are willing to do to help family. I have clients that are like, there's no way my dad is going to give me this money. It's just not going to happen. And then a week later, they're like, yeah, my dad's going to give me 150 grand. I'm like, what? Great. And it helps a lot, because if you have that 20% down, so just as an example, if you're buying a $500,000 house and you want to put the minimum down payment, which is 5%, your premium is going to be about $20-something thousand.
That's
Okay.
an insurance premium.
The insurance premium. Okay. Again, you don't have to pay it out of pocket. It just gets added right onto the mortgage. If you put 20% down, you don't have to pay that. You just saved $20,000. Like, that's not a small amount of money. And then you can also amortize your mortgage over 30 years instead of 25. So your payment gets way smaller. So, when you have that conversation with mom and dad or whoever the person may be, tell them like, this is helping me a lot. Like, you're really, really helping me a lot. And, sometimes if you have someone who's just apprehensive, they have the money, but they don't want to give it to you. They feel like, maybe they don't like your spouse or something. I don't know, whatever. And they don't want to give you the money. They can always take security. You could always put them in second position so that if something goes sideways, at least they can get their money back. Right?
So there's safeguards, and all the reason to have a great lawyer too that can help with that creativity. So guess what? We are at time.
Wow.
Yeah, time flies when you're having fun. So again, in the booking link, please feel free. There's our contact information here on the screen. Sarah, if you can put the booking link in the chat again. Last thing, don't forget, download this. We'll be sending out links, and watch your text string. We will still be in touch with you to send out things, as well as if we have great opportunities, news that comes out, we will send you out some text information just to see if you're interested. I heard about a property you might want to share with that whole second entrance, separate possibly. So I like to share opportunities with everyone that's taken the time here. So feel free to book time with us to go over your particular situation. Real estate is a wonderful thing to be part of, and it might be a little bit scary, but experts like us can help you sort of navigate the journey. So thank you very much, and wishing you all a good night. Thanks to Sarah and Todd and Joe and everybody
Thank you, Heidi.
coming
You're in great hands with Heidi.
Thanks, Joe. And I hope to meet many of you and answer any more of your questions and help out. So good night to everybody.